This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China is planning a tax revamp that would raise costs for imported fuel oil, prompting independent refiners to slow purchases in another blow to a sector reeling from thin processing margins amid faltering demand, industry sources said. Beijing is widely expected to roll out a change starting from October in the amount of consumption tax rebates refiners receive once they sell gasoline and diesel fuel refined from imported fuel oil, according to multiple industry sources. That would boost state revenue but inflate costs for importers. The revamp would further pressure China's independent refiners, known as teapots, that typically use fuel oil as a feedstock for processing into fuel.
U.S. oil producers were scrambling on Monday to evacuate staff from Gulf of Mexico oil production platforms as the second major hurricane in 2 weeks was predicted to tear through offshore oil-producing fields. The U.S. National Hurricane Center said a potential tropical cyclone in the Caribbean was expected to rapidly intensify over the Gulf's warm waters and could become a major hurricane with winds of up to 115 miles per hour, 185 kilometers per hour, by Thursday. The storm, which would be called Helen, could hit the U.S. as a Category 3 hurricane on the Saffir-Simpson wind scale, bringing the risk of life-threatening storm surge and damaging hurricane-force winds to the northeastern Gulf Coast and Florida Panhandle, according to the NHC.
Moving on to the top news in the energy sector.
India's monthly oil imports from Russia fell by 18.3% to about 1.7 million barrels per day, BPD, in August from the previous month due to lower crude processing by some refiners, tanker data obtained from trade sources showed. In contrast, China stepped up purchases of Russian oil last month, reclaiming the spot of Moscow's top oil client after India became the biggest buyer for the first time in July. The share of Russian oil in India's August imports declined to about 36% after rising for 5 straight months, the data showed. In July, Russian oil accounted for about 44% of India's oil imports.
A goal to triple global renewable energy capacity by 2030 and cut fossil fuel use is within reach, the International Energy Agency said in a report on Tuesday, but will require a huge push to unlock bottlenecks such as permitting and grid connections. The report comes as leaders from government and business come together at New York Climate Week to try to drive forward action against climate change. Almost 200 countries at the COP28 Climate Summit in Dubai last year agreed to reach net zero emissions from the energy sector by 2050 and pledged to triple renewable energy capacity like wind and solar. Next, we have the top news in metal markets. India's finished steel imports from China hit a 7-year high during the first 5 months of the 2024-25 financial year, provisional government data reviewed by Reuters showed. India's overall finished steel imports also reached a 6-year high at 3.7 million metric tons in the April-August period of this year, and the country was a net importer. The world's second biggest crude steel producer has been consuming the alloy at a faster pace with robust demand from the infrastructure and automotive sectors. India shipped 1.1 million tons of the alloy from China in the April-August period, up 31.7% year-on-year, the data showed.
Prices of iron ore futures recouped losses on Tuesday, as a wave of new monetary stimulus from China and restocking ahead of the top consumers' national holidays lifted market sentiment. The most traded January iron ore contract on China's Dalian Commodity Exchange, DCE, was up 0.52% at 672 yuan, $95.22, a metric ton, as of 0231 GMT. The benchmark October iron ore on the Singapore Exchange traded 2.11% higher at $91.35 a ton. China's central bank on Tuesday announced broad monetary stimulus and property market support measures to revive an economy grappling with strong deflationary pressures and in danger of missing this year's growth target.
We will now look at the top news in the agricultural sector.
Indian refiners cancelled 100,000 metric tons of palm oil purchases for delivery between October and December, as New Delhi's move to raise import duties amid a rally in overseas prices prompted them to book profits, 5 trade officials told Reuters. Refiners in the world's largest importer of palm oil cancelled this quantity over the past 4 days, including 50,000 tons on Monday, after Malaysian palm oil futures jumped to their highest level in 2.5 months. The Indian cancellations could limit the rally in Malaysian palm oil prices, although they could support soy oil prices as some refiners shift to soy oil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.